So we're joined today by Harald Janson from SV Life Sciences, and they're the investment managers of the International Biotechnology Trust. That's a London-listed fund focused on the biotechnology area. And Harald is the lead portfolio manager of the quoted portfolio, which is the vast majority of makes up the vast majority of that trust. Harald, thanks so much for joining us today. I wondered, as an introduction, if you wouldn't mind just giving a bit of background on SV Life Sciences, and also just touch on the investment objective of IBT.
So IBT is an investment trust listed on the London Stock Exchange, as you mentioned, since 1994. So it's just past its 20-year anniversary. The main objective is to invest in the long-term growth in the biotechnology, life science, healthcare sector. And over the last 20 years or so, this sector has grown by 14.5% per year, year over year, as compared with healthcare that has done 11%, and the general stock market only 7.5%. So it's really a good place to be in for long-term growth.
And as you said, we have seen extraordinary returns from this sector over a period of time. Actually, this chart shows over the last decades some very strong performance, both in absolute terms and also relative to the global market. The Nasdaq Biotechnology Index being a usual benchmark of US biotechnology stocks. What is notable is that there's been a recent sort of reversal in sentiment that we've seen over more recent periods. And I think we can't really not discuss biotech without maybe discussing some of those points, which, as I understand it, have largely revolved around US political risk in the lead up to the election, and also the debate around drug pricing. And I wondered if you could give us your sort of current views on those two aspects.
Well, on the drug pricing, we can look at the global world and see how is it done. In Europe, it's very much state-controlled pricing. You negotiate with the government and you decide about the price. In Japan, you can set your price as the way you like, sky high, but then the government will cut the price every second year quite substantially. And in the United States, there is a third method, the free pricing. The company can set any price they like, and there will be no involvement really from the government side. So what we worry about now is that the Hillary Clinton might introduce some price control mechanism similar to Europe. She tried to do that in the 90s when her husband was the president of the United States, and that failed completely. But before failing in a very short period, only half a year or so, this program was on the table. The equity market for healthcare and pharmaceuticals came down almost 50%. And the reason is that a lot of the pharma sales are in the US and a lot of the profits in the US. So currently I don't see any risk that type of idea will be reintroduced from Hillary Clinton. I think Bernie Sanders talked a little bit about it, but he is now out of the elections, so to say. It's going to be Hillary Clinton, and she also has the mandate from California and Massachusetts, Democrats around those states, and that's where all the innovation is. So from the innovation point of view, I think that we're going to stay with the same system. The only thing that the new government will do is to see that we have a better kind of within the system of free pricing, that you have a better mechanism to control the price in the sense that there should be good competition. Should not be any monopolies. Should have good competition, and all drugs that are generic, they should not be able to raise the price 5,000% as we saw last year. So I would say that older drugs and Me Too drugs are more vulnerable to price pressure in the future, as they are right now, but maybe increasingly so. But new drugs that bring something really, that will benefit the patient, something that is good and can match the medical need. For example, for cancer patients to prolong their life, or when there will be a new Alzheimer drug or similar things, then there will be a good price paid for that drug until the expiry of the patent happens 10 years from now or so. And then you will have your generics come in with lower prices. So the high price is really only for a very short period of time in mankind's history. I think it's a good bargain, really. So to answer your question, until we have the elections in November, I think there will be some worries in the market regarding the outcome, and then when the elections are done and over with, I think there will be we come back to and look at valuations, the potential growth for the future. So I would currently see this worry that we have in the market as rather an opportunity to enter this market if you're not invested.
Let's move on to innovation in the sector, because that is one of the big investment cases for having a long-term investment here. Another chart here from the FDA in the US showing new drug approvals, and there does clearly seem to be, over the last few years, an uptick in the number of approvals that are coming through. I wondered if you could maybe sort of give some colour on that, and is that a sort of a new wave of innovation that we should expect to continue?
Yes, you're absolutely right. We've seen the hottest year in 2015, both on the globe and also with 45 drugs approved last year. So this is kind of a leading indicator for what's going to be sold 5-7 years from now, peak sales. So we expect pharmaceutical sales to grow 5% per year over the next 5 years. And then beyond that, we can look at charts that you show, you have more drugs approved. And if we look beyond this chart and see what does the pharmaceutical biotech companies have in their portfolios, we also see every year in the last 15 years that there's an increasing number of projects in development. So the lead indicator for what's going to happen beyond 2020, what's going to come to the market beyond 2020, looks really good. So if we think about a growth of top line in all drugs in the world by 5% per year, reaching $1 trillion in 2018, the biotech has a higher top line growth than the general pharma. And on top of that, you can have your EPS growth is going to be even higher. So maybe this sector, biotech sector, could actually give, let's say, 12% EPS growth, and an active manager could give another 3%. I mean, maybe we could do 15%. That's a forward-looking statement, but so the underlying fundamentals look really good for the long term, and you can ask yourself then, where does this come from? Well, the reason is that we have a fantastic increase in knowledge now everywhere. It's not only bioscience, it's also science in general. Your cell phones, you're going to the space. There's an acceleration of knowledge, and that knowledge we can then harvest as products. And in this industry, we harvest as new drugs that meet medical need. So on the output side, I see very good, nice supporting growth. And you can ask yourself on the demand side, well, is there anyone that really is going to buy these drugs? Well, there is an increasing population in the world, and the population is not increasing evenly. The elderly part is increasing much faster than the population in general, and it's the old people that really get sick and need the drugs. And secondly, you have emerging markets where you have more people that have, belong to the middle class and can pay for it. So there are several drivers also on the demand side. Yeah.
One other key point that comes up a lot in commentary on the biotech sector is valuations. And this chart tries to sort of put the current valuations in context. So a slightly busy chart, but what we're trying to show here is looking at the largest names in the US biotech sector on a PEG ratio basis. So comparing the current price earnings valuation with the expected growth in earnings. And you can see that on average, those large cap biotech names are on a PEG ratio of 1.6, and that actually compares very favourably to the pharma sector in the US, for example, and also the broader index. So actually, given the sort of reversal in sentiment, we're actually seeing quite good entry point into biotech. Would you agree with that?
I do agree with it, and you can cut the pie in a different way and say that the P multiple for the mega biotechs today is slightly below the PE multiple for S&P 500. That is usually a good entry point for this sector.
I wanted just to finish up, if we could maybe pick out one particular area, maybe a subsector or a therapeutic area that you think is particularly compelling at the moment and that you have exposure to in the portfolio.
So our portfolio is invested in various therapeutic areas. So the largest therapeutic area is oncology. It's 1/3 of the portfolio. The second largest is rare diseases, where we have 25%, and then we have approximately 10% inflammation and central nervous system and so on. So why do we have a lot in oncology and rare diseases? And one of the reasons is the one you mentioned. I'll come back to that. There are really good growth drivers there. But secondly, it also conveys good resistance to price pressure. In oncology, there is not the same price pressure because you deal with seriously sick people, and the drugs you give will prolong survival, and you will not, take away that opportunity by shifting to something that is not as good. And for rare diseases, there is usually only one drug on the market, so there's very little competition. So what is interesting in oncology right now is that we have a new area, apart from the traditional ones that for therapy. It used to be like, we still use surgery, we still use chemotherapy, and we still use radiation. That's the foundation. But now we have a new fourth sector or type of therapeutic modality that is immune oncology. So you try to reinvigorate your immune system to kill the tumor, just like it can kill a pneumonia or a virus infection. So we're learning a lot in this area, and there are already a couple of drugs on the market, mostly used for second line or third line, but now moving up to first line. So actually today we have very good data from Merck in the United States, and it's from the first time it's been shown that this immune oncology drug, Keytruda, is superior to chemotherapy in first-line lung cancer. That is the type of news we're going to see, and this type of drugs are going to take a big part of the market. I think Merck is well exposed, Bristol Myers is well exposed, also Astra has a good pipeline, and Roche has a good pipeline. And these type of investments we really look very carefully into and invest in our portfolio. Among those names, I also like to mention a smaller name, a Genmab, that we have owned for a couple of years, and they have a unique asset for a tumor called multiple myeloma. That is a tumor of the bone marrow that is really devastating and affects mostly the elderly population. Now, the drug that Genmab has developed is unique in the sense that it conveys a very good efficacy but very little side effects, and the potential competitor is like 4 years behind. So monopoly situation, good pricing, and it's possible actually to give it to elderly people without killing them. You know, some of these therapies can be devastating in themselves, but this is a relatively, gentle with the side effects, and you can actually give it to someone that's 80 and 90 years old.
Harald, that's been a very good insight. Thanks so much for joining us. And if you'd like any further details on the International Biotechnology Trust, please contact your investment manager. Thanks very much.